Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Let's take a look at one of our 4 agreements. To begin a great relationship, know what you want. Know what the needs of your body are, what the needs of your mind are, and what fits well with you. There are millions of men and women, and some of them will make a good match for you and others won't. The two of you only need to be like a key and a lock, a match that fits. Market-wise, let's take a look at it out here. We had the Dow down 185, NASDAQ off 14, S&P's down 15, gold contract down $43, traded $1,326 an ounce. Silver off $1.49, trading out at $21.80. Platinum off $33 at $1,429 an ounce. Copper down 3 pennies at $3.30 a pound. Light sweet crude off $1.72 at $104.67. Bonds up 12 at 131.19. King dollar up 85 cents, 85 ticks rather, at 80.56. The euro back 10 at 135, and the yen flat at 99.37. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Oh, baby, volatility is in spades all over the place here. Okay, so Wednesday. First off, Wednesday. What do we do Wednesday? Well, Wednesday, you got up to a price point of 17.29. You get over the swing that was generated on the 2nd. You did it with volume. That sets up a 17.76. A to B equals C to D. We hit 17.30, 17.29. Today, what do? We come back with, and there's a reshuffling happening evidently in the Dow, big time. We come back with 1.7 billion, folks, okay? But now, watch what that's actually going to do. So, bottom line, you come back, you come downtown. That's the first part. Now, I already got a question, is the 17.76 open still? Yeah, and it is. Now, let me show you why. When you take the characteristic of what you did for the week, what you're going to have now is that you got over the 17.0967 and you get the juice over it. You know, volatility is going to be here in spades, but that's how that baby's set up. We go over to the Dow Industrials. Dow gave back everything, folks. Dow actually down $1.85. And the leaders inside the Dow, it wasn't even Big Blue. Now, Big Blue is biting the dust. There's no doubt about that. Big Blue volume came out huge, 7.8 million. You go down $3.50. Big Blue's going to stop making its run again for this 181 level. We'll see whether it decides to take it out. But in that context, it wasn't even Big Blue that was taking the Dow. Well, let's put it this way. It was helping it, but it wasn't the laggard. The laggard inside was Caterpillar, Microsoft, United Technologies, and Boeing. You know, Caterpillar, go take a look at Caterpillar. What we had with Caterpillar is this. She goes south. Monster volume, 12 million shares, $3 down, couldn't handle the higher end. Okay, so now NASDAQ. What do we have with NASDAQ? NASDAQ, first off, got to a 37.98. So that got to a higher high. We did 2.3 billion. So now what you are going to have is that you get a high up there that has volume. And so that says, guess what? That's going to get tested. The comp itself, I suspect ES is going to test it. $14 for the NASDAQ's not a big deal. The Dow was the one that basically took some real heat out here. Now, let's go to the gold contract. Now, folks, if you haven't test drove the gold report, go do it. You can get 30 days absolutely free. And you're going to want to do it. This is going to, you know, the first buy after this correction already lined up. We got it. This is going to be the second one, and it's going to be a beauty, and I'll explain why. I'm going to take some time on this, okay? So, what does gold do? You get a lot. Markets are just so deviant, it's amazing. But gold market, as I said earlier this morning, that was born under the sign of deviance. So, the metal itself pulls back $43, which is no big deal, by the way, okay, on a Friday afternoon. Gives back most of the gains. The equities, however, let's go to Rango Resources first. So what do the equities do? Well, the equities, folks, if we take Wrangle on Wednesday took off from $71 up to $79. And then in 2 days, it gives back 6 of those points. You're at 73. Now, that wouldn't be bad if, in fact, we didn't get an expansion of volume. But guess what? We did. So, what do you have set up? Well, guess what? This little baby wants to pull back all the way to 68. Now, what it's doing is that you have two different... Here, I'll bring up another one. And this one here is predicated flat out on the price of gold. And this is what's telling me that the price of gold is actually going to go lower, too. If you take a look at Royal Gold. So, what happens with Royal Gold is this. And by the way, Royal Gold is one of the best gold stocks out there, best business plan out there. There's no doubt about it. Royal Gold has all of... So check this out. They have 21 employees. That's it. And they take in, I think it's $263 million, $283 million. Okay, so the business plan they have is amazing. But bottom line is that the first acceleration up was a beauty. Went from $41 nonstop up to 67. Now you're at 50. But watch what it did. What it did, you had the spike up on Wednesday. Now, none of these spikes up, folks, took out any swing point. And when you get a spike without a swing point, oh, man, that's one of the most dangerous setups I've seen. And this is proven it in this case. It doesn't happen every time, but in this case, this is what's going on. So then what do we do today? Guess what? You broke the lowest swing with volume. What is that setting up? That's setting up that we're going to basically be making a run back to very low prices once again. If we look at AEM, an Eagle, same setup. An Eagle, the first run got up there to $33, coming off a low of 25. You had a correction next time to 26. It was $29 2 days ago. An Eagle, guess what? Is going to run all the way into the bottom of that $25. Bottom line, so the deviance inside that market, the setup was nice as it was coming in. Period. Why? Because the fear was there. Now the fear is going to be extraordinary, folks. The reason it's going to be extraordinary is that you had the expansion up. Plenty of folks thought that, I have to get in. I have to get in. It's going to go. That just blew up, and it blew up really quick. When you blow up in 48 hours of that many equities that pull back that quick, folks, that's why you're seeing the acceleration down there today. It's problematic. Bottom line, it's going to set up down the lower end of those. So go check out the gold report. Bonds. Let's go take a look at the bond market. What you have with the bond market is this. 30-year bond, she is set up at 131.22. That level there, folks, this is what you have, okay? That level is basically saying that, hey, guess what? We're going to be running up to this 136 level. It's a nice setup. You had the wide price spread, expanded volume, all of the above. On that setup, meaning on Wednesday, you pull back with lighter volume, rejected lower price, it hasn't. What is really intriguing is this, so check this out. The 10-year, folks, TYZ. Okay, so check this out. This is going to be amazing watching, because this is going to be watching the mortgage rates. It's going to blow your mind. So the mortgage rates, folks, are predicated on the 10-year. The low of the 10-year is 1.67. The 10-year right now is, I think, 2.7. They got as high as 2.9. I think it made it hit 3. The setup on the 10-year, because you got to remember something here, is that the shorter duration, because of QE, the more volatility that can get into it, too. But on both ways, okay? When it was blowing up, yeah, bang, it was the biggest blow-up, I think, probably since 1994. Now, just the opposite is going to happen now there. So watch the 10-year. This is what you have. The 10-year is setting up an ABC structure on the way up, folks, to get it into the 130 mark. Now, the high was only 132. So that's going to basically bring rates down dramatically once again. What the 10-year had done, did 1.7 million contracts on the way up. It backed in lower today with 800,000. I mean, the setup is there. It's an extraordinary setup. If we look at the 10-year today is 2.7. Now let's go over to the home builders. I want to go over the home builders because I'm going to show you this correlation. It's pretty cool. If we go into Lennar, right? Now Lennar, huge expansion on the way up, contraction on the way down. Nice acceleration on the way up on Wednesday. You're pulling back with lighter volume. Now, this is amazing. The home builders, folks, are setting up like the gold stocks. It's going to be wild watching this whole thing shake out, man. Now, the difference is that the home builders, of course, have a large A to B leg, okay? Bottom line, It's going to be a lot of opportunity out here. And the bottom line on the S&P, that it's going to end up being a complex ABC structure. 1776 is in the work still. But what you do have is that, as I said yesterday, longer, we're going downtown. You stay right there, folks. We're coming right back.